Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the stock market pullback that took place today on Tuesday, November 20th, 2018. I made a video yesterday for the 19th, called it the 20th. That's because I was recording late in the hour. So today we're going to be going over the quick pullback that took place today on Tuesday, go over what stocks are bouncing back positive. We're going to take a look at the main indexes, the stock futures, the total S&P 500 as a whole, talk a little bit about oil, silver, gold, bonds, and kind of wrap it up there. I'll try and make these little daily videos pretty quick. I like to make them for historical references just because I like to see these dips. I like to see the deflation of these high strung up FANG stocks. So let's go ahead and get into it. If you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week, so consider subscribing, and let's go ahead and get into it. So today we had all the indexes fall: the S&P 500, the Dow Jones, the NASDAQ, the Russell 2000. We even had the emerging markets fall. So we saw Apple. We talked about it last night. We released a video covering Apple. We had a lot of opinions, and we suspected that Apple would hit 175. Today, Apple hit 175, bounced off those lows. Everyone dove into it at that price. I don't see Apple falling any more below 175. I believe that's that supporting line. If it did break below 175, I would say 164 as its next supporting line. But I do see Apple bouncing back up to 182, 184 over the next few days, weeks, or months before people get back into it all. I think there's a little bit of fear as you know, in the market as a whole. You can see all these articles discussing Bitcoin plunging. Oh, we're in a bear market. We've been in a bear market for 50% of the stocks out there within the S&P 500. It was only these FANG stocks holding up the S&P 500 with it market weighted the way that it is. With these FANG stocks now deflating, that really helps out the S&P 500. This is why I've been trying to invest in single stock allocations. I still hold many funds. I still have my thrift savings plan with the S&P 500. I still have my own Roth 401k with the S&P 500 funds. But for the most part, within my Roth IRA, my IRA, they have been targeting single stock allocations. So taking a look here, Wall Street bets that the boom may be over. The boom was over back in February, March. If you look at the majority of the stocks within the S&P 500, the VTI, these stocks within here, only a few of them were actually holding it up. If you look at 50% of them, they were down for the year 10, 15, 20, 25% between February, March, and July, August. Now in August, lots of fund managers started to move their money out of these tech stocks, and we're seeing it reinvested in other places. We're seeing it move into consumer, we're seeing it move into healthcare, utility, REITs, and such that had been hammered earlier in the year. Now we have a couple different opinions. We have boom may be over, but it's really just the FANG stocks deflating, coming back to a correction period, which is correction territory, which is completely fine. And we have this JP Morgan strategist saying that we're not in a bear market. We just needed this pullback. We needed it to happen in order to continue moving forward. We just, it had to happen. So the S&P 500 today sold off 1.82%, year to date down 1.19. The Dow Jones sold off 2.21%. Apple was basically the culprit here, losing nearly 5%, along with a few other stocks here. We can see a lot of red today. So lots and lots of red within the Dow Jones here. So it wasn't just Apple, it was a collection of a bunch of stocks, but this is a great buying opportunity. We talked a little bit about how buying the dip could be, slightly off, but this is a lot for mostly a lot of the tech stocks that were already overdue for that correction anyway. So if you're buying the dip on a lot of these, what would you call them, value opportunities, or these strong consumer branded companies here, you're more than likely, you'll buy the dip. If it goes down slightly more, you'll buy it again and again. Investing is a long-term play. You don't get rich overnight. You don't get rich by investing in day trading day to day or week to week or month to month or year to year. It's a 5, 10, 15, 20-year program. So let's go ahead and continue here. So the NASDAQ down 1.7%, year to date up 0.08. The Russell 2000 down 1.84, year to date down 4.33. The emerging markets today sold off 2.16, year to date down 16.21. Now if we look at the S&P 500 as a whole, today we can see that some stocks are starting to bounce. Google starting to pick back up. Facebook starting to pick back up. If you look at the PE ratio of Facebook and compare it to a Procter & Gamble, Facebook actually has a lower price to earnings ratio than Procter & Gamble. That's kind of odd to me, but we shall see. Apple hitting their lows of 175, picking back up now at 176. So we're going to see Apple continue to move a little bit higher here as investors feel more comfortable. We're going to see it move into the 182, 184 price range over the next few days or weeks. And taking a look here at futures, stock futures are currently looking positive. So if you've been averaging in on this Monday and Tuesday dip, see your portfolio begin to have a little bit of green tomorrow, hopefully, as the main indexes start to bounce off those lows. I think that the majority of these stocks that were holding up the S&P 500 and such, I think we're going to begin to see them, trend sideways for a little bit. And then as investors see that we're not going to just drop off a plunge and go into a waterfall movement, I think they're going to begin to move back into the markets. And sector rotation is just about finished up. You're going to see this all finished up here within the weeks. Just this month here, we're going to be finished up, and you're going to see the stock market begin to kind of move higher again. Not all-time highs, but just within the next, expect another 5% either way. It could move down 5%, it could move up 5%. That's where I see it moving in the next few months until interest rates rise. If interest rates rise back in December, at the end of December, we may see a bit more of a pullback. Or if they don't decide to raise them, they say, hey, we're in a good position right now, let's not raise rates, you're going to see the market move higher. So some stocks here that were most active in the after hours, we have Microsoft, Qualcomm, we have DowDuPont, we have Apple, we have AT&T, so a few technology stocks in there, not a lot of financials. I was hoping to get a little bit more financials here. I like to see financials and technology kind of predicting where the stock market's going. And we can see futures are looking positive right now. So NVIDIA bouncing off a little bit off those lows. I know they were hammered a lot recently, along with Activision, EA, and all the other things. So oil today fell off a bridge here. They just leaped and jumped off some cliffs here. So oil dropped really big, 7% loss. This was just a lot of pressure underneath the stock market sell-off that took place. You saw oil today sell off 7.17% today. Year to date down 6.16%. The dollar also moved slightly lower today. You can see here trended a little bit sideways earlier this morning, and then as of tonight, actually after hours, the dollar is starting to move down. So this is just recent. It is 3 hours ago. Okay, so this is Eastern time. I'm over here on the West Coast. It's 12:11 right now. So the dollar is moving down right now. This is good for the markets as a whole. Cheaper dollar makes the market move up higher. So that could be why that we're seeing the futures begin to look positive right here. We see that the dollar is a little bit weak for the day. Stocks are going up. Bonds are kind of settled for the day. So we did see silver and gold sell off a little bit today. Silver down 0.7, gold down 0.03, basically flat for the day. So if you're looking to hedge, I don't worry about silver or gold. I've been kind of interested in checking out some bonds, not the bond market fund, but maybe some corporate bonds for these dividend value, blue chip companies. I may look into some value bond ETFs. So if you guys have any suggestions, let me know in the comment section below. I'm looking to maybe kind of add a few in there. I'm not sure. I like my dividend portfolio. I'm not, I'm only down like maybe 1 or 2% within that Roth IRA. My IRA that's holding Apple got obliterated here just within the last few weeks. I'm still positive about 3 or 5%, but it has been a fun little ride. 10-year now at 3.05. So here, Procter & Gamble example, we're kind of talking about this earlier. Procter & Gamble is trading at a price-to-earnings ratio of 24.04. Guess where Facebook's at? That's not Facebook. Facebook is at a PE of 19.96. Now, Facebook is getting whacked here recently. There's a lot of blaming and suing kind of going on. There's a lot of stuff going on with Facebook. We could, the Facebook, I don't know what to think of it right now. I was kind of looking at it to add it to my portfolio inside one of my portfolios, maybe my IRA, but I'm kind of holding off on that. I would like to see them do some more integration of Instagram, but we shall see. Anyways, I don't want to take up too much more time, so we're going to wrap it up there. Wednesday should be a positive day. We'll see what kind of goes on during the end of the day that'll either drive the market higher going into Friday, over Thanksgiving. And that's basically it. So if I don't see you guys again until Friday or Saturday, thank you all for tuning in. I hope you all have a happy Thanksgiving. Go out there, eat some ham, some turkey, what you can eat, and have a good holiday. So thank you all for tuning in. I will see you next time. Have a great day. Bye.